Hello friends, good week. How are you today? Vladimir here with you, and this is the weekly review for the first official week, complete full week of August, 5th of August 2012. What a surprises, what a moves we had during the last uh, Wednesday, Thursday, and Friday. Start with Wednesday with Bernanke doing nothing. The market zigzagged up and down, going all the way to Thursday, and with Draghi's speech, which said the European Bank will make everything to protect the euro, right? And the crash of the European is not an option, and that's what happened with this optimistic speech, right? Words. Pay attention for this level. All the traders that shorted the euro dollar set their stop loss above this spike, and we got a spike here, taking the stop losses, and the euro dollar make to crash, right? Then right after his optimistic words, he just said that he does not trust fully on the banks yet, and then the banks have to prove strength much more. And with these words, the euro dollar crushed, and the whole market started to make another down move. Right after that, on Friday, the euro dollar stopped, and Draghi's word seems to be just a trap. Just a trap, just to show the euro dollar is ready to go lower, but then, bam, a full retrace without any anything that should make us ready for that. The euro dollar retraced, and with the amazing news coming from USA with the job with new 163,000 new jobs were added to the market. With this wonderful NFP news data, we got an up move, and the question is, what is next? The first thing, before we go to the chart, I do want to share something. I said not once that this data might be confusing. Why? Right now, summer is the top, is the highest area, the highest level of the tourism. Many people find job which is a partial time, right? And pay attention to the most interesting thing. Yes, more jobs were added, but the unemployment rate also was increased by 0.1%, from 8.2 to 8.3. Okay, so the question is that really so good, so good news? I would not trust that. But it just, from my point of view, put us on bigger distance from the QE number 3. Everyone expects QE number 3, and I want to ask, why? Why? And the question I ask is mainly because of the indices. Pay attention to the indices, friends. They are on the top. They keep to be on the top. This is the Nasdaq, this is the S&P, and this is the Dow. They all on top. If it was after a crash, okay, I could understand. They have to intervene. But that was not after a crash. We are right now on the top. Why should QE number 3 come? Seriously. Why? Because they had few months bad situation, right? Bad data. That's not the time for QE number 3. And I suggest, from my point of view, once again, everything of course could happen, and many surprises could come. But I think we should all forget about this QE number 3. It's not something that should be done. And if it would be done, I'm not sure it will have positive effect for long run. It will most likely have negative effect. More money, less value. And that what could cause the next crash for the stock market. But it all takes time. We'll discuss about that. So now, after the fundamental view on the market, let's take a look on the trades we should go with for upcoming week. The first would be, of course, well, the first and the main trades I have on my list to watch are related to the Aussie. Pay attention to the Euro Aussie. This is the first one. Okay, after a Marubozu and double doji on a weekly, we can see on a daily chart wonderful divergence, right? And kind of, as we can see here, an engulfing right now, right? At the end of Friday. From my point of view, this is the time for the Euro Aussie to make an up move. The first up move somewhere back to the higher side of the Bollinger Bands. It could be all the way straight here, it could be all the way to here, right? It could be limited, it could be very strong, getting closer and closer again to the 200 moving average. After going down by more than 1300 points below the daily 200 moving average, now it's time to get closer for that. The maximum level I think it could reach, the Euro Aussie, is here. This is the trend line we have, and this is the resistance we have. That's the maximum point. The 121 kind of around is the maximum point I could see the Euro Aussie going. I don't think it, well, I hope it will, but I don't think it will. I think it will be not straight like that, but more something like that to this resistance. Still, it means we have around 300 points to go, 250, 300 points to go. We have place for that, but that's my opinion. I'm not sure that the long down move is over yet. But also we need to remember also one very important thing. The monthly chart has monster divergence. Even if the Euro Aussie push a little bit lower, see that? Little bit lower. Okay? This divergence will come to its end. Okay? During the next months and during the next period. Which means something is going to happen in Australia. With the interest rate cut or whatever it is, with this monster divergence we will get long retrace. Question is how exactly it's going to happen and when exactly. So far we have the monthly divergence, we have the daily divergence, and we have a weekly Marubozu with double dojis, which could give us a retest back to the resistance and the trend line. The next pair is of course the Aussie franc, which is kind of one-to-one with the Euro Aussie. The pair right now, as we can see here, okay, with this trend line, reached the top right now, right? Reached the top. Could we trust this top? Should we trust this top? It's, well, different story. But that's the monthly trend line, because with all the intervention from the Switzerland bank with the European currency, it's 50-50. But Aussie franc has a Marubozu, a doji, and now kind of inverted falling star. You see that? Kind of falling star. It's bearish pattern. Now, normally after such bearish pattern, or it begins immediate down move, or it pushed a little bit one last time, push, and then make much bigger move. If we go for the daily chart, we can clearly see that we got right now a bearish engulfing. I said not one, because this pair follows this extreme for a few weeks, and I'm on bearish opinion. I would never go to buy right now, for example, because of all the divergences. Only question of time until move happens. Remember that. Now we have a trend line here, which is pretty much similar to the Euro Aussie trend line, right? And we also have a 20 candles right plus, okay, it's already 40, which means the lower band at least should be reached. Now, from my point of view, with the current divergence and of course the RSI divergence and the stochastic everything, we should start to see the push. Will it be straight? I'm not sure at all. Okay, but I do think we will get not like that, not a crash like that. I hope we will. I just don't think so. And we can see a move all the way back to this area to 0.99, or if it will not go like that, okay, it will go like that, so the area we will watch will be around the parity. But that's the time, this is the period. Of course, it doesn't mean it's going to happen right now. It could happen within a few weeks, but the bearish move for this pair should begin itself. So that's my opinion for the Aussie franc. This is the second pair to look for these interesting sells. Now, also very interesting situation here. As you can see, this line, right? You see that? This is the high, right? Okay. We got here a false break and a retrace immediately in. You see that? Again. Now with an engulfing. That's another interesting point to watch. And on the 4-hour chart, okay, believe it or not, pay attention, let me enlarge that, okay, believe it or not, but here, this is the first time, okay, we get here kind of same area with a bearish pressure, which means a bearish convergence. Definitely not the classical one, but it means bearish convergence start to build itself. Yes, it could push a little bit lower, then retrace a little bit, okay, like something like that, then make small retrace, and then a continuation move all the way down. So that's why, from my point of view, bearish period is about to come. It doesn't mean, once again, it's going to happen right now on a Sunday, okay, with the beginning of the week, but it definitely one to watch. This is the second pair of the Aussie. The third pair is the Aussie Canadian. Wonderful weekly daily divergence. Sorry, weekly chart. We can see straight move, band to band, pretty much without stops. We have wonderful resistances area. As you can see, this is the last high, right? From this period. The next high is just around 110, but pay attention to the daily charts, friend. Daily monster divergence. If we get the push somewhere to around 106 and a little bit higher, we might have the RSI reaching the 80. With the current divergence, it means we are reaching an extreme, and a down move is about to start. My recommendation: watch this 106, 107 range. Watch for a bearish candle pattern. Watch for MACD to change the slope down again to bearish again, and attack. And with this attack, I would say that Aussie Canadian has to reach 104.50 again at least, but I would go even further and say it will reach 103. Of course, it will take a longer time. Pound Aussie, also pair to watch with a bearish candle pattern and wonderful divergence. Okay, should be wonderful area to begin the buys. Also, we are now 500 points straight, almost straight move from the 200 moving average. We should get closer to that. It should go back to the 20 MA or even higher to the resistance to 150. Definitely pair to watch. And the Pound New Zealandian, a pair I recommended to start to watch for a potential false break. The false break never happened, so let it go. We have a support right now 190. We have a little bit lower around 188. In this area somewhere, Pound Kiwi should make the stop, and with the divergence and the potential RSI on the bottom, on the very extreme, we could get a nice stop and the retrace. Okay, Aussie pairs and New Zealandian look very interesting. The next one is Aussie against the New Zealandian. Pay attention for this trend line, friends. I think on the daily charts this pair will reach this area, which is around 128, something like that. And on the 4-hour charts, just watch this pair going. We have few supports there to pay attention to. This one and this one. Okay, few supports here to pay attention to, and watch the 4-hour divergence. Okay, that's the confirmation with the daily chart trend line and the 4-hour chart divergence that should build itself here. This area around 128, a little bit higher, a little bit lower, could become a wonderful buy opportunity. So pay attention for this pair. Okay, Aussie Kiwi it is. Now I do want to discuss a little bit about the euro. First of all, the euro pound, which is a wonderful opportunity from my point of view. Daily chart. Okay, we were looking at this buys long time, and we said it's going to get back. Now pay attention, friends. You see this trend line? We're almost there. Once it reaches this area, it might go and create a wonderful hidden bearish divergence. So mark yourself a level. This is a range of the euro pound on the daily chart to create this hidden divergence, bearish hidden divergence, and on the 4-hour chart go and create one of the divergences we know, extreme, with new MACD high and RSI above 80, and then a crash down back to the trend line, which will be the target. Okay, back to the trend line, which will be the target, like that, push and all the way down for 100 points or more. It could go and slowly and create here on this part another divergence, continuing our regular divergence, and then start a slow move, not a crash, slow move back to the trend line. And if it breaks this trend line, that would become another bearish move, but that's really far for now. It's not relevant, most likely for this week, most likely. So we just wait for, first of all, to look for the bearish opportunities, and the bearish opportunities, friends, are exactly like that. Look to sell on the range. It's something like 0.7940 to 80. That's the range where it should stop itself and begin the down move back to the trend line. If the daily chart closes above this trend line and holds above, that could be a bullish sign that the euro pound is ready to go all the way to 0.81. It's pretty much far, so let's pay attention for these both scenarios. Euro Canadian, another interesting pair with the harmonic pattern it has, a bullish butterfly, inverted hammer on the previous week, now a regular hammer on this week. It should go and start the up move. First area it has to visit is the resistance we can see on the daily chart, right? We have a strong resistance right here. It's around the 127. We also have a level that still was not ever broken. It's the 125. So let's pay attention how it behaves. Break above 125 and we get the okay to go to 127. But the real target to watch based on the harmonic pattern is right here around the 134. Pay attention for that, friends. Very bullish for this pattern. By the way, if it continues lower, then 118.50 is the next area to watch for jumping. It's a wonderful area for the pair to begin its move. So euro Canadian it is. About the euro dollar, also very interesting situation. Based on a weekly chart, it has to push at least to the 20 MA, which means to 120, around the 126, maybe a little bit lower. But it must place itself above the 124. If it places itself, here, above the 124.20, finally, that will be our okay that we are going up to 126 area, and then probably to this trend line. So what I try to say that as long as the euro dollar for this time will hold above the this is the area 122.20, as long 122.30, as long as it holds above this area, we have a bullish scenario, but it must place itself above 124 in order to continue higher. That's about this one. Now I do want to show you the New Zealandian dollar also. Okay, let it go. It should go and push higher, especially after breaking this resistance. Watch out this area, friends. 0.8280, 100 points from now. 0.8270, 90 points from now. Watch out this area. We have still a bearish divergence here, a bullish push, and RSI might come to 80. Pay attention to this area. From here, we might see the retrace coming. And few words about the indices. I'm neutral. even though I think it could push higher, but watch out for the double tops, friends. On everywhere, S&P, Dow, whatever you just, no, this is the European, sorry. I think here also we can, no, on the American indices, as you can see, okay, we have double tops forming out. Pay attention for that. So far I keep bullish, but pay attention for these levels. Okay? Nothing to do right now. Definitely we will have something to do very soon, in few weeks, okay, maybe a few months, but it's time to get ready. That's all for this week, friends. We have many things happening right now, especially with the last things. And remember, as long as the index is so high, right, despite of the fact that the economy has some bearish signs, it's nothing. No need to push more money. And if they push, it might have exactly the opposite effect as they want to have. Thank you very much for watching this video and for your time. Have a wonderful week and good trades and good profits. Yours, Vladimir.